I think, in fact, it's funny because what I was going to say is I've done just over like 1.5 billion in loans and thousands of loans. And here I am 25 years in, and I still am learning every single day. Putting this whole condo presentation together, I was like, I didn't know that, I didn't know that, I didn't know that, I didn't know that. And it always cracks me up when I get someone who's been in the business for a long time and you tell them about something that happened. They're like, in my 40 years, I've never heard of that. It's got to be impossible, right? One of the biggest pet peeves of all real estate right there. So I will say this, I learned a ton putting this presentation together, so I'm so glad to be able to present it to you guys. So again, thank you so much for coming. Really appreciate it. It's going to be a boring class. Super, super boring, so try not to fall into your food as I'm talking, but you can't dress up condos that much. We'll try to make it as fun as possible. But what we're going to be talking about today is Condo Game Changers, and really it's how to protect your listing, your commission, and really represent your seller going into the next year. And I was just talking to Daniel, and it's like, I think we're just starting to scratch the surface of how bad it might get for the condo lending world for a bunch of different reasons. So let me start out with this. Anybody have personal experience with a condo complex, either trying to sell or buy into, and you couldn't get a transaction done? All right. Currently. Daniel, let's hear yours real quick.
Well, I'm just telling you, I live in the community, and I've sold multiple units in the community in Rancho Penasquitos, and they're all at a standstill. And the last one I sold was in February, so every agent in there is going into escrow, and I'm watching them go pending, fall back out.
Yep.
Pending and fall out. They rezoned us as a high fire severity.
Yep.
And the insurance seems underfunded.
Yep. What's the name of the community?
Penasquitos Village 3.
Okay. Where's it at?
Right off Carmel Mountain Road.
Yeah. And is it butted up right next to like a whole fire hazard area?
Right next to the 56.
Yeah.
56, right next to Black Mountain.
Yep.
Yeah.
Yep.
And like I said, one of my neighbors sold for $125,000 to a cash investor under market.
Yep.
Same one that I sold in February for $625.
Yep.
Sold for $500.
Absolutely.
And
I think.
it's sitting.
Yeah.
You try to do for sale by owners, it's sitting.
Totally. Joe, you're in one right now? What's going on right now?
It got kicked off the Fannie Mae approved list, so it's unwarrantable at the moment.
Yeah.
Which is kind of strange. We should be able to get it put back on.
Yeah.
Because they have in the bylaws the ability to flip to self-insured, so everybody needs an HO3 policy.
Yeah.
And an HO6.
Yep.
But somebody dropped the ball, and the verbiage isn't proper in the bylaws, so we have to have this.
And the good news with that is federal government and state government usually work very quickly, so I'm sure that'll get resolved right away, right? Anybody else issues with condos recently? Angel, you nodding? You had one?
Yeah. It took a while to get it listed, and then once we finally did, we found out that they didn't have an open reserve, so they had just fallen out of the FHA. So again, not wonderful.
Yeah.
It was so low because of all the issues that was happening throughout the complex. They continued to keep increasing pricing, HOA prices, special assessments.
Yeah.
Because they're all hemorrhaging money.
Yep.
Because of the repairs and the issues there.
Yeah.
But with that being said, the only time they can do it is over 25% of the down payment.
Yep.
And then it's still iffy.
Yeah.
VA still apparently is still fine because unless there's an issue that's posed by it, any VA person that looks at it, they're like running.
Yeah.
Because of all the delinquencies.
Yep, 100%. There's just issues after issues, and we're at almost a tipping point right now where it could really cascade and get quite a bit worse, which I'm going to touch on later on. So anyways, if you haven't had any problems with condos yet, be grateful because that's awesome. It means you're representing just the exact right condo, but you probably will, and that's what we're going to talk about today is just how you can get around those pitfalls before you actually list your property for sale, okay? So here we go. Change is the only constant in life, or I like to say in real estate, and that's so true for everybody that's been doing this a long time. I started in 2000, and everything was great from 2000 to 2007, and then 2008 came. It was actually August 2007, and that change was horrific. I don't want anybody to go through that. It was absolutely awful, thinking you're making money, and all of a sudden your entire world was blown out of the water. But you adapt and you overcome, and you keep going. And then the introduction of the LE and the CD came out, if you guys remember that. right? With the LE and the CD, they're like, you're never going to be able to close a purchase transaction in under 60 days. It's not going to happen. 6 months later, adapted, overcame, made it happen, right? Next thing would be COVID. Actually, there was a recession in 2016. We made it through that. COVID. You guys are selling homes with masks, virtual tours. They said the real estate industry is going to collapse and fall apart. We made it. Awesome. And then inflation came. Like, you're never going to sell a house again. You're never going to close a mortgage again. Everybody seemed to make it through that. And then we're now here with condos. And we're going to see what happens with condos and what rolls out and how things are fixed. I think right now the pendulum is like swinging crazy. It might have a little more crazy to go before it comes back. But eventually we'll make it through this as well and it'll come back. So here we go. Condo Game Changer agenda. What we're going to talk about, balcony inspections. Has everybody heard of SB 326 at this point? Okay, great. I just want to make sure if nobody's heard of it, we touch on it, which we will. Insurance requirements. It's a big deal, and it's about to become an even bigger deal. Fannie Mae critical repairs. We'll talk about this. Litigation. Obviously, litigation's been around for a long time. I think there's going to be more litigation as more and more errors come up in the inability for HOAs to be able to fund the repairs of these issues that pop up. People get mad. When they get mad, they sue. So it's going to be an interesting one. And then educate to originate. How can you take all this information that we talk about and approach your clients, educate them so that, one, they know what to expect and you look like a professional and get the listing over someone who's not presenting this information, okay? So here we go. What this class is not about. I'm not going to go deep into guidelines. It's already boring enough. If I start reading guidelines to you guys, you're going to just walk out the door. So I'm going to go over the top. If you have questions, stop me and say, hey, what about this, this, and this? But we're just going to kind of skim over the top of guidelines. There'll be no scamming in this class. You should have a packet. I think it's this one. I'll be referencing that quite a bit. So let's get this show on the road. We already talked about this, but everyone has seen or heard that there are issues with condos, right? What the hell is going on with condos? HOA certs are killing deals. Insurance requirements are killing deals. You've got your balconies are killing deals. Community inspections are killing deals. And mismanagement of funds is killing deals all day long, okay? So why is this happening all of a sudden? Does it seem to you guys that over the last 2 years is where this has really been popping up, right? Cool. On June 15th, and this is really important for you guys to remember these dates, especially if you're going to be educating your sellers, okay? This is a big one. On June 15th, 5 Irish nationals and 1 American were out on a balcony celebrating the 21st birthday when it collapsed from the 5th floor. And 6 people died, 7 people were seriously injured, and it was a big, big deal. And if you take a look at, if you're out partying on a balcony at 12:15 a.m. is when it happened, and all of a sudden the wood rot from underneath the balcony on the 5th floor falls, hey, what's up, Brad? How are you? Take a seat, everybody. If it collapses because the thing's completely rotted through, not a good thing. And I started thinking about, who goes up and inspects the 5th floor balconies of these condos? I wouldn't. I'm not sure who does. So it's a massive issue. Next one. Then, in December 2015, the court was told the collapse happened because the contractors had cut corners trying to save money. And the management company ignored the red flags when the tenants said that there was mushrooms growing under the deck, right? That's pretty wild. I always think of mushrooms growing like if I leave my sprinklers on too long, and then all of a sudden there's so much moisture you start getting mushrooms in your yard. It takes a lot of moisture for mushrooms to be growing on your deck, which is pretty wild. So then round 2, June 24th, I'm sure you guys remember this. June 24th, 2021, the collapse of the Champlain Towers South Complex in Surfside, Florida, which killed 98 people. It's one of the most tragic housing events in American history. Just insane. The pictures, this picture shows the devastation, right? Unbelievable, that's horrific. But this is where you really see how catastrophic that was. The entire side of the building completely collapsed, right? It happened at 1:15 a.m. in the morning. So if you can imagine, if you're on one of the lucky ones where you're on the interior right here and your wall falls away and you wake up to that, like what an absolutely horrific experience, okay? So condo maintenance became a big deal, if you can imagine. And those two events are really what have pushed out all of these changes in guidelines and are really, I don't want to say causing problems, because they've changed the guidelines to protect everybody, which is incredibly important. But now everybody has to catch up to all these guidelines. Because think about how many condos were built in the 60s and the 70s. And how's the maintenance been over 60 years, right? I mean, there's a lot of single family homes that are dilapidated after 20 years. So it's a pretty important thing. So the result of the Liberty Gardens collapse, Senate Bill SB 326, or the balcony law, as everybody knows it, right, was passed on August 30th, 2019 and became effective January 1st, 2020. So why are we just now seeing, we've all been told about it, but we're really starting to see the effects of how this is affecting lending and people being able to buy and sell. All condo communities have got to be inspected by January 1st, 2025. I think we're 25 days away, 26 days away, right? So there's a lot. I actually talked to one of these inspectors, gave him a call. I'm like, hey, how many inspections are you doing right now? He goes, we're doing inspections every single day, right? Because if you're a condo community, you're told in 2022, you have to have it by 2025. It's like studying for a test. Do you do what you should do? 2 months prior, start studying, or do you wait for the day before and cram it all in? That's exactly what's happening. And as these reports start coming out and are being issued, then more and more problems are going to be popping up, okay? So all condo communities must be inspected by January 25th. Lenders weren't required to add it to the HOA certification until December 2021, which means 2022 and 2023 was the first time it came on the HOA certifications. But if the community hadn't been inspected yet, and the HOA management companies didn't know of any major incidents, everything was still passing, right? Here we go. Through 2022 and 2023, a lot of communities still didn't have their inspections completed as of January 25. Like I said, everything has to be inspected, ready to go. The result of the Champlain Towers collapse. This became a multifaceted situation. Both federal governments and state governments got involved, right? So both big dogs really took notice and said, hey, we got to make changes, okay? So shortly after that, the GSEs, government-sponsored enterprises, revised the policies on loans purchased in condos. So if you're doing a purchase loan, it has to meet these guidelines for a Fannie Mae, Freddie Mac, FHA, VA, USDA loan. Otherwise, they're not getting their insurance. And if they can't get their insurance, then they can't sell the loan on the secondary markets. No lender is going to touch that. So it's super, super important, okay? October 13th, 2021, Fannie Mae issued an immediate revision to how condos are being reviewed. The revisions took effect January 1st, 2022. Okay? Freddie Mac then issued it February 28th, 2022 as well. So it's just been rolling out over the last couple of years. And just like anything, when Fannie Mae and Freddie Mac give a new guideline, it takes a while for the banks to digest it and make it part of their systems. You got to think of every single bank as the Titanic trying to turn, right? You don't just update your systems right away and that day it's going. 6-month rollout, 1-year rollout before it really takes effect and goes, okay? So that's why we are just really seeing it come into effect over the last year and a half. So what are the condo killers? What are the condo killers? There are plenty. Let's talk about it. We just talked about the SB 326, the condo balcony rules, January 25th. It's also known, by the way, if you guys hear this term, exterior elevated element, which I like to say that's what it is. It's a scary, yucky phrase, and it's really wreaking havoc. Who conducts the inspections? It's not like you're sending a handyman out there, you guys. It's going to be licensed architects, civil structural engineers, building contractors with appropriate license classifications, and building inspectors with an A, B, or a C5 license, right? And they have to have 5 years of experience. So, and here's the other thing. A lot of these inspectors are tied to the companies that also do the work, right? It's in their best interest to find things. So there's a rule, which we're going to get to in a minute, where they only have to take a sampling of 15% of the units. Well, I'll tell you right now, if they can't find something out of the 15 units, they'll just keep looking to the 30th unit, 45th unit, 55th, 65th unit, et cetera, until something's found. What's inspected? Now, everyone thinks it's just balconies. It's not. It's so much more than just balconies. Your balconies, stairways, walkways, and porches. Have you guys shown properties and you're walking around and you're like, this is pretty iffy, right? So it's not just the balconies that people are inspecting. Visual inspections. It's usually visual inspections, and obviously if they see something, they're going to be digging for more. They'll take the probe out there and look for moisture. If they got to break in behind stucco and look behind the stucco to see what's out there, they absolutely will. Looking for water spots. Water spots is a huge one, a huge indicator of any type of leaking. Here's the one I was talking about, the 15% inspected to ensure that there's a result that represents the overall condition. Guarantee they're going to go for more than 15% until they find something, right? Focus area. Load-bearing components. This is actually, again, super interesting because everyone thinks just the balconies. Load-bearing components like beams, joists, support posts, waterproofing systems, including flashing, membranes, and coatings, guardrails, attach points, signs of water intrusion, like I was talking about, any yellow staining on a ceiling, anything where it looks like there's water spots, they're going to dig into that. Balconies, stairways, porches, support railings, walkways, entry structures. Okay, so they're diving deep. And this is just for SB 326. Okay? The other one, insurance. Insurance is a huge, huge problem in California. And the more insurance companies that leave the state, the bigger the problem is going to become. Quick story for you. So you guys, everyone's heard of California Fair Plan, right? Okay, so California Fair Plan just 3 years ago, there's a guy named Carly. He owns a company called Old Harbor Insurance out of Temecula. Fantastic guy, incredibly knowledgeable. And we sat down, we did like a 15-minute podcast conversation. And he said that 3 years ago, California Fair Plan was the number 36 insurance company in the state of California. As of 2 months ago, it was number 3, right? And California Fair Plan was never intended to be an insurance provider. It was only supposed to be for emergency purposes when people couldn't get insurance. Well, what's happened? Because of inflation, which I was actually surprised by this. I didn't think that inflation would be such a driver for insurance premiums going up, but it is. When you are having to fix something, the cost of the material, the cost of the workers, the cost of the insurance to insure the workers, all of this has gone, through the roof due to inflation, combined with the smart people in Sacramento and all the regulations that they put on the insurance companies. 80% of the insurance companies that were in California 3 years ago are now gone. 80%. That's wild. So it's not good. It's not looking good. They need to fix it somehow. I don't know how that's going to be. Carlo is actually he sits on boards. He's heavy into it. And he said that there are things they're trying to pass to make it all come back, but it's going to take time, right? Inflation going away, as everyone has realized with rates not coming down, is quite a bit stickier than we ever imagined it would be, okay? So the two biggest issues with condo insurance, the replacement cost and the deductibles. Replacement cost and the deductibles. The replacement cost. Oh, and by the way, I put an example in the packet. If you guys turn the page, and I think, Daniel, you've got a couple, an example of insurance going way up as well, right? Oh, yeah. Awesome. I'll touch on that in a second. So there's 2 pages. The first page is the insurance policy of a condo complex out in Escondido, and the insurance was in 2022. And you'll see, I think I highlighted it. Maybe I didn't. Sorry if I did. Okay, cool. The coverage was for $73 million, and the deductible is $25,000, right? Turn to the next page. Same exact policy, 2024. The coverage is $30 million, less than half of what it was, and they shot the deductible up to $100,000. Okay? And why would they do that? The insurance companies are dramatically lowering the coverage to keep the annual premiums down. Okay? Because if they kept that coverage the same, they would have to hit the homeowners association with dues that are $400, $500, $1,000 higher just to be able to afford the insurance. Okay? So they dramatically lower the coverage so they can keep the premiums down so it doesn't affect the occupants of the condo community. But the problem is, as soon as the condo community lowers the coverage, now you can't get a loan, right? So they're trying to protect the occupants by not raising their HOA dues, but by protecting the occupants, now none of them can sell and no one can buy. Unless it's cash, like Daniel's talking about, where they have to fire sell the thing to some investor who can say, hey, I'll give you $400,000 for your $500,000 condo, because they know eventually it's going to get worked through, right? Eventually this is going to be taken care of and everything's going to be right. But for someone who has to get out of there, and then what does that do for all the other condos in that community? So hopefully they fix it quick. Okay, next one, the deductibles. Insurance companies are raising the deductibles to keep the overall premiums down. Same exact situation as the coverage. You know, they're trying to do right by the occupants because they can't afford a $1,000 per month HOA when it was just $350 a year prior, right? So high deductibles can significantly reduce the premium cost of the master insurance policy. Higher deductibles discourage frivolous claims. If you got to pay out on every single little claim, well, raise the deductible. Now people won't file claims anymore, right? Well, again, trying to protect the occupants, the homeowners, but when you can't sell your property or refinance your property or buy into the community, it's not very helpful. The deductible for the master policy is additional policies like fire, water, flood, wind damage. It can't exceed more than 5% of the actual policy. So if you're at, let's take that $30 million, that example in there, you can't go over, what is that, 150,000, 5%, 30 million? I think it is. So they're at 100,000 and it can't go over 15. Like, not good. Here we go. Additional fun facts about insurance, since we're having such a good time. Fannie Mae, this one's really interesting too. Fannie Mae, because of the whole collapse in Florida, they required inflation guard coverage. What's inflation guard coverage? Since the price of construction has gone up so much and so dramatically, the insurance policy has to keep up with the cost of inflation. So now your insurance premiums are going up every single year, no matter what, just to keep up with the cost of construction and inflation. So that's not good. Fannie Mae requires that insurance companies, in order to be able to be a valid insurance company, and that's by the AM Best rating system. By the way, AM is Alfred M. Best. I didn't know that. One of the things I learned. Anyways, he's got a rating system. However, for new policies, they prefer companies with a rating of A- or higher. So here's why this is so crazy. We have a client who just purchased their home in January 2024, this year, right? And September, rates improved, right? So he bought this condo, everything's going great. He loves his condo, loves the community. We go to refinance in September. Well, the master insurance policy, the company that provided the master insurance policy, their rating went from B+ to a B. So we submitted the loan, sent it to underwriting, came back, the underwriter's like, hey, we denied your loan. I'm like, this is the cleanest vanilla file in the world. What do you mean you denied the loan? And it's because the master insurance policy, the insurance carrier rating went from B+ to a B. Guess who that insurance carrier is?
Fair plan.
Allstate. Allstate. One of the biggest insurance company in the entire country. And the other crazy part is that Allstate had been the insurance company for this community for 20 years. 20 years they've held this policy. And now all of a sudden, because their rating went from a B+ to a B, nobody can sell, nobody can buy, unless you do like a cash sale. You could also do non-QM, but non-QM isn't going to help this guy because it's a much higher rate than a conventional Fannie Freddie loan, right? So, horrific. Like,
Triple E inspection, is there like do new condo communities need to have that?
yeah.
So, okay.
It's within 3 years of existence is what the rule is. So if you're brand new, then within 3 years you have that. And then every 6 years after that, it has to be re-inspected. Great question. Any other questions on that, you guys?
It's ratings.ambest.com.
You found it?
Oh, will it tell you? Okay.
Well, look.
Also, don't forget about fire and flood. This is a fun one. Daniel was just talking about this. That's the fire insurance that has become such a nightmare because you might be, and here's what's wild about fire insurance. On Palomar Airport Road, have you guys driven down Palomar Airport Road? And you notice how there's like the green areas right there on Palomar Airport Road? If your house is butted up next to that, that's a high fire hazard zone. And your California Fair Plan is the only option that you have, which is pretty crazy. Have you guys seen a map of the high fire zone? Have you guys seen it for San Diego County? Yeah, the whole thing's red all the way down to the beach. There's like little bits and pieces of areas where it's not red, but it's like the entire county is going to burn. So that's fire. And then flood's interesting too because FEMA, when they put their flood maps together, they didn't say, hey, here's this river valley and it kind of winds around there. They just did straight line. And anything within that straight line is now in our flood zone. And there's a couple units or condo communities in Oceanside, which there's no way, even in the greatest 100-year storm, that they'd be affected by a flood. But because of that straight line that FEMA has put in, they're in the flood zone. And now what's happening with the condo communities is there's one, what is the name in Oceanside? A big condo community. Anyways, the HOA master insurance policy just dropped their flood coverage altogether. They said, hey, we're not going to do it because it's so expensive that it would cause the occupants' HOA to go through the roof, right? So luckily, there's a couple lenders for now where they will allow the unit owner to get a personal flood insurance policy. They're not cheap, but if they're willing to do that with a conventional loan, out of our 82 lenders that we have, there was a couple that were willing to allow that to happen. Okay, so fire and flood, lots of fun there. Now here's a good one, PUDs. Oh, sorry, Jen.
Can a buyer acquire fire and flooding insurance, and then how long before they can cancel it?
So, great question. What I hear you saying is that can they, let's say they are trying to buy or they currently live in a community and they drop their fire policy, or the HOA master insurance did, and their flood policy, right?
Yeah, like if they're trying to get the loan.
Yeah.
And so they get the insurance to get the loan.
Yep.
They get the condo.
Yeah.
How long before they can cancel the insurance?
Great question. So here's the deal. Fannie Mae and Freddie Mac guidelines specifically state that if it's a condo community and the HOA management company requires that the HOA master insurance policy covers those items, then the HOA master insurance company has to cover it. Like for fire specifically. You can't get an individual policy for fire. Out of the one property in Oceanside that I was just referring to, like I said, we have 82 lenders and we just emailed everybody. Can you do an individual policy? Only 2 came back saying that they could. And what happens is that if you guys have ever had a client who their insurance company dropped them as they're owning the home, we get phone calls and emails about this all the time. Allstate dropped us, Progressive dropped us, whatever. The mortgage company reaches out to them right away and said, hey, you've been dropped. You have to get insurance. So I think to answer your question, Jen, to say if the mortgage servicing company finds out that you dropped it, they will insert their own policy and it'll be 4 times as expensive as one that they can find. Does that answer your question?
Yeah.
Okay, cool.
And coverage is reduced.
Yeah.
It's
Yeah.
a mess.
Yeah, 100%. It's not good. PUDs. If there's a shining light in this mess, albeit dim, not very bright, PUDs. If it's a PUD and the HOA master insurance company is not covering the actual structure, then none of these insurance guidelines affect PUDs. Okay? Everybody know what a PUD is? Planned Urban Development. It looks just like a condo, but if the unit owner has to have their own structural insurance, then all of these HOA issues don't affect PUDs at all. Okay? Here we go. Critical repairs. This is one, SB 326 gets a lot of the attention. But has anybody had classes on the critical repairs? Okay, critical repairs. This is the one that came down from Fannie Mae and Freddie Mac, and this is there's in the back of your packet. There's a critical repairs cheat sheet that I gave you guys that goes over all of the coverage, or not all the coverage, all the issues that can come up from critical repairs. We're going to email you copies of this as well, so you have it for your records. But critical repairs is really the one that's going to be causing the most problems, especially as all these inspections and reports come in. But watch this. Critical repairs guidelines have evolved over time. Temporary guidelines came out in January 2022, and they had updated that in September 18th, 2023. And then they started making it have to show up on HOA certifications in 2023 as well. Okay? So this one's wordy. Projects in need of critical repair. And this covers a ton of items. Are those needing repairs or replacements that significantly impact the safety, soundness, structural integrity, or habitability of the project's building, or the financial viability or marketability of the project? That's pretty broad, right? That's pretty broad. So they're checking not only the condition of the property, but also the finances of the property and the marketability of the property. So it really opens the doors for a lot of items to pop up, okay? Material deficiencies, which left uncorrected, have the potential to result in or contribute to critical element or system failures within 1 year. So if they see something that's pretty dire, it needs to be taken care of right away, or it's a dead deal. Any mold, water intrusion, or potentially damaging leaks to the project's building, advanced physical deterioration, any project that failed to pass state, county, or other jurisdictional mandatory inspections or certifications specific to structural safety, soundness, and habitability. Any unfunded repairs. So now they know that there's repairs, and anything that's unfunded costing more than $10,000 per unit that should be undertaken within the next 12 months does not include repairs made by the unit owner or repairs funded through an additional special assessment. So there's lots and lots of things that can come up, especially now that all of these inspections are due and coming in. I think we're going to see a lot more repair issues on our condos moving forward, okay? So, we just ran through all these. Litigation. Let's talk about litigation. This has been around for a long time, and when people think litigation, the very first thing you should always think about is it construction defect? Right? Construction defect, does everybody have an idea what construction defect is? I'll break it down. When a brand new condo community is built, I'm not sure if it's state law or federal law, but there's a 10-year period where they can sue for any reason and it holds everything up. And that's construction defect litigation. So what attorneys do is they find the condo unit buildings that were built and it's coming up on that 10-year clock, and they'll just file a lawsuit. They don't have to have anything. They'll just file a lawsuit just because they have to get in within that 10-year window, and then they'll go and search for things that they can sue over, okay? So it's a dirty little lawyer trick, but it happens on almost every single one of the downtown San Diego condos. If you guys have followed that, it's been a big issue for a long time, okay? So construction defect, anything having to do with safety, structural soundness, or habitability, functional use of the projects, more like zoning violations, unauthorized commercial activities, that kind of thing. Financial stability of the homeowners association, and this is where I think it's worrisome. As they raise the HOA dues and people can't pay, and then things aren't taken care of, people sue. And that's where once you have a lawsuit where it could affect the HOA monthly dues, you can't get a loan on that property, right? Because part of the debt to income ratio calculation is that HOA monthly dues, right? But if you don't know what that's going to be within the next 12 months, you can't get a loan. So that's a big one. HOA certifications. Where can you find all this information? On the HOA certifications, you guys. So if you're working with any lender and they don't order that HOA certification on day 2 of the transaction, right? I say day 2 because it usually takes about 24 hours to figure out who the HOA management company is, how to contact them, what they charge, how they take payment. Some are still old school where you have to literally FedEx a check and a form to them so they'll send it out. Others use their online platforms like homewisedocs.com or something like that. And you guys, has everybody been on the receiving end where the HOA management company takes 2 weeks to get it back, and that's with a $200 rush? It's wild. We have people now, I think we just did one where it was a $300 HOA, and to get it within 10 days, they had to pay another $275. And these HOA management companies are looking at it as another stream of revenue. And all they're doing is taking the same information and regurgitating it and sending it out every single time. And let's say you have, 5, 6, units in your community going, that's another $7,000, $8,000, $9,000 coming in a month. It's crazy, It's crazy. So there's 2 levels of HOA and condo certifications. Angel, you were talking about this, and this is one of the things that is super, you're spot on when you said the 25%. There's a full HOA, right? And I gave you guys an example. Take a look at your packet. In the packet, this one from NewRez. Has anybody ever seen an HOA certification? Really taking a look at it to figure out what's on there? This HOA certification from NewRez, this is a full HOA certification, the Big Daddy. It's got all the questions, right? This is required when you're putting less than 10% down. So that's why when you guys are marketing your condos and you have all this information up front, and you know there's little bits, there's some issues, maybe you don't take an offer that's putting less than 10% down. You need to be able to strategize and understand this, okay? There's a bunch of condos on here, or not condos, questions, excuse me. In green, if you see the highlighted green items, did it come through? Or pink maybe? Looks like Daniel Brown, yours is pink, okay? Those are the ones that are just specific to the full certification. And those are ones that are really the most common deal killers. Obviously, there's other questions, but these are the ones that kill deals the most when it comes to a full HOA certification. And then there's the ones in yellow. When you see them, these are the questions that are on both the full and the limited review. When do you get a limited review? When you're putting 10% down or more on a primary residence or a second home. And if you're buying an investment property, you got to put 25% down for an investment property. So depending on the lender, and this is another thing that's so crazy, lenders will put additional questions that aren't required by Fannie Mae and Freddie Mac on their HOA certification because they want that additional layer of protection, right? So you have lenders where, like this one, look at the second HOA certification, guys. This is from UWM. Everybody's heard of UWM, right? United Wholesale Mortgage, the largest lender in the country. Their HOA certification is 15 questions, something like that. Well, it says 20. I'm sorry, was I still looking at the same one? It's like 22 questions, but if you take away the, like, what's the name of your condo, et cetera, it's like 11 questions is all they're asking versus 40 questions on a full, okay? You'll have lenders that add questions, and that could absolutely trip you up, so you got to be careful which lender you're using. So why is the HOA certification so important? Because every single issue that is going to come up, almost every single issue that can come up, is going to be on that HOA certification, okay? Balcony inspections, there's questions about that. Critical repairs, reserves, special assessments, ownership issues, HOA delinquencies, litigation. It's all found on the HOA certification. So again, if you're a listing agent and you've got a lender, the appraisal, and more importantly than the appraisal, have you ordered that HOA cert and when is that thing coming in, right? You should be asking that loan officer every single time. And if they haven't ordered it yet and you're on week 2, buckle up. Who's had a condo deal killed on week 4 because they didn't order the HOA certification till week 2?
So this HOA cert, as a listing agent, can you order that in advance? And like, I'm a listing agent for a condo, order it, have you look at it, tell me what to be on the lookout for?
Ben's completely spoiling my class.
No, hold on. But like, the question is, so normally the buyers pay for that, right?
Yeah.
So the seller can pay for it, check it out, just make sure that they know what to be on the lookout for. The lender buying the property, can they use that one, or do they have to order it again?
So great question, actually. Every now and then a lender will be, not every lender's like this. Like we have plenty of lenders where I can use a random HOA certification, right? But we also have lenders where they require it just on their form. So to answer your question, it's like some will and some won't, right?
So it would really just be an investment for the seller to just know which buyers can.
100%. Absolutely. Okay. We just checked out the side-by-side comparison. What I really want to do a deep dive in, and I know this is boring, but bear with me, guys. Here's the questions that pop up, and I don't have my glasses, so I'm going to be squinting here. But check out the ones in yellow. Have there been, no, I really can't see. There we go. Have there been any structural or mechanical inspections over the last 3 years? What level is those? Let's go. Oh yeah, so good. Have there been any structural or mechanical inspections within the last 3 years as of the questionnaire completion date? So that's it right there. That's your SB 320 or 326 and your critical repairs right there. And what's been happening is they've been saying no because they haven't had the inspection done yet. Then it goes to question 2, which is, hey, out of your knowledge, do you know of any repairs that are needed? And we've actually had a bunch of HOA certifications come back where it says, yes, we do know that there's repairs. Or the trickier one is when they say, yes, there has been an inspection. And then automatically, if there's been an inspection, the underwriter says, we need a copy of that inspection. Tell me if you guys have experienced this yet. And then the HOA management company says, pound sand, we don't got to give it to you. And then you're like, what? What are you talking about? You're not going to give it to us. That's crazy. So then what do you have to do? You have to go get the last 6 months of the monthly meeting minutes. Am I saying that right? Monthly meeting minutes, yep. And then if there's not enough information on that first 6 months, they'll go ask for the previous 6 months as well, just to find all of the information out, just because the HOA management company won't cough up that inspection, which is just crazy. How there's not laws against this. Hopefully there will be. So it's become a big, big deal. Any questions on certifications? Read through it. It's a ton of fun. It's good reading. If you can't sleep at night, break this thing out. You'll be asleep in no time. Here we go. Now, a lot of people are saying, oh, we'll just do a non-warrantable loan. We'll just get a non-QM loan. That'll solve everything, right? Not at all. Not at all. I added a non-warrant or non-QM HOA certification in there as well. They don't ask the specific questions, but they do ask about special assessments in a lot of them. And some of our non-QM lenders do ask about the critical repairs in the SB 326 as well. So depending on the non-QM lender that you use will determine if they do a deep dive on this too. Okay? So it's not so much that it's just non-warrantable condos and non-QM lenders are the fix all. And don't worry, we got non-QM in this thing, you're good to go. Here's the differences. Here's the real differences or true differences between warrantable and non-warrantable. Non-warrantable, by the way, is non-QM. Warrantable is going to be your agency stuff, your Fannie Freddie. Okay? Warrantable or Fannie Freddie, one entity can own up to 10% of units. Non-warrantable, one entity can own up to 30% of units. Investor concentration, how many people are bought in there as investors, right? Rental properties, up to 50%, they can go up to 80% on non-warrantable. Commercial space, max 35, 50% for non-warrantable. HOA budget reserves, 10% of your budget reserve has to be set aside for reserves. Versus on a non-QM loan, 5% of the budget can be set aside for reserves, okay? HOA delinquencies, only 15% of the community can be over 60 days late. I think this one's gonna be a big deal later on down the road, especially as these HOA dues go up. The more and more people that fall behind and are delinquent on their HOA dues. And by the way, that question is on all 3 HOA certifications. So we're not getting out of that one. And you can go 20% on non-QM loans. Master insurance deductibles can be 5%. You can go a whopping 10% on non-QM. Okay? So there are differences with non-QM or non-warrantable, but it's not this drastic difference that just catches everything. Does that make sense? Okay.
Is that page in here? I don't see it.
That one?
Yeah.
No, but I can get it to you.
Yeah.
Would that be helpful?
Yeah.
Absolutely. Can we write that down? Thank you. This is the HOA certification for non-QM loans. It's in your guys' packet. You'll see it's a lot of the exact same questions. And this Linsure, this is our personal favorite non-QM lender. I'll add this. One nice thing about non-QM is that they will give exceptions. So if you have someone who's coming in with 35% down, great credit scores, lots of reserves, they will do things on exception that you'll never, ever, ever get an agency loan to do. And the reason why you can't get an agency loan is that it's very black and white. If you don't meet guidelines, you can't get that Fannie Mae and Freddie Mac insurance that's required for it to be a sellable loan on Wall Street. And if a lender can't sell that loan on Wall Street, that's pennies on the dollar for that loan. And they don't want that. They don't want that on their books. Make sense?
But the down payment would need to be 35%.
Great question. When it comes to exceptions, it's so unique because it could be the underwriter takes it to the owner of the company, because a lot of these non-QM companies, they're smaller companies, right? They'll take it to the owner, and the owner might be in a good mood that day. Like, yeah, we'll grant that exception. Or then the next day, they're like, no, we're not doing that. So when it comes to exceptions, there's no set rule. But if there's compensating factors, meaning there's a lot of value, a lot of assets, great credit scores, maybe landlord history, those type of things, you're going to have a much better chance at getting your exceptions completed versus if not. Okay? Approved condo list, the list you want to be on, right? FHA approved condo list, everybody knows that there's an FHA condo list out there. If you ever want to know if a condo is on the FHA approved list, you can do it yourself or you can send it over to me and my team. We'll look it up for you. Here's the deal with FHA. A lot of lenders require HOA certifications for condo communities when someone is buying a condo on the FHA approved condo list with an FHA loan. There's lenders out there that will double down and make you get the HOA cert, right? And that'll kill the deal. So you got to make sure that if you're listing agent and it's on the FHA approved condo list, but you know there's problems, you better make sure you're accepting a deal from a lender who doesn't require that, okay? There is a form, and it should have been in your packet. I think, did we squeeze these in there? The one form that is required is 9991 form. And you can see the questions on there. They don't ask all the same questions of other HOA certification forms. It's real minor. It's just 2 pages, and they got to sign the 4th page, okay? VA approved condo list. VA approved condos are really the most lenient of all condos, of all lending, right? You do have to get the HOA master insurance policy, and sometimes that's a killer for VA condos. But other than that, if it's on the list, you're good to go. The Fannie Mae and Freddie Mac list. They have those lists and they're published. We have them if you're looking for it. And then, of course, individual lender lists. We have, like UWM, for example. They do millions of loans. And they have a whole database of all the communities and complexes across the nation that they've done loans with and not done loans with, or not denied loans because of whatever reason. Now,
That's a quick question.
Yeah.
If it's on the list, do you still need the cert?
Great question. I meant to bring that up. If it's on the Fannie Mae approved list or that lender list, you don't have to do the certification. You still got to get the insurance, and they'll ask if there's any litigation. You got to get like an email from the HOA master, or the HOA management company, just saying there's no litigation. But you don't have to do the HOA certification. So that's why it's such a big deal as listing agents. Find out all this stuff up front so you can strategize on who you're going to market to and who you're going to accept offers from. Okay. The not so approved condo list, the one you really want to avoid. Did you know Fannie Mae? This is like some dark ops stuff, some black ops stuff. They've got a Fannie Mae blacklist that if you're on there, you cannot get a loan, period. There's no way. There's over 1,700 condos across the country right now that are on the blacklist. And until they come out that list, Joe, which I think, was yours on the blacklist or was just, okay, cool. Yeah.
It just fell out of off the Fannie Mae approved list.
Yeah.
Within the last month.
Yeah. That's, yeah.
It's more of a clerical thing than anything else. Because they're already self-insuring.
Yeah.
So,
well,
they just got to get some amendments to the
yeah. Good news, bad news. The state that has the most condos on the blacklist is Florida. The bad news is that the state with the second most is in California. So, well, at least we're not number one. The lenders have their own individual blacklist as well. So why is that important? Because Fannie Mae and Freddie Mac, as a government agency, they're slow. They're not going to know what's going on versus the lenders are doing loans every single day. Something pops up immediately on their blacklist. So we can access any one of our lenders. They all have their own blacklist, and we can run your condo by the blacklist anytime. Okay? What if your property isn't on any list? And that happens. Number one, check the MLS, right? I don't have access to the MLS. I don't even know how to work it. I really don't. But I know that I've been told that you can go on there. You can find out how many condos have been sold in that community in the last however many years. You can check the type of financing. Is that right? And whether it's conventional, FHA, VA, hard money, cash, right? So if there's items been sold, check the financing. What's been going on? If there's been some FHA transactions in that community, but it's not on the FHA approved condo list, it means it's probably eligible for single unit spot approvals. Okay, so super important to know that, because if you can open up that buyer pool to FHA buyers as well, absolutely you should know that, right? And how many times have we had a listing agent put that it's FHA approved, only to find out that it's not halfway through escrow? Oh, hopefully not halfway through escrow, but right when you open up escrow. Also, it's possible, especially for VA, if you don't see it on the VA approved condo list, but there's been VA purchase loans done on that community. Possibility it's not under the name, it's under the tract number. Okay, so we can look up the tract number anytime, make sure that, if it's one of those communities or condos, we can let you know. Or maybe it's a PUD, right? Which that's the best option. Maybe it's a PUD. All right, here we go. Now, how can you take all of this information and use it to your advantage, right? Origination through education, really big on this. If you guys know your stuff, if you're true professionals, and you can present this information to your potential clients, I truly believe it'll help you win deals. I can't tell you how many deals I've won on the mortgage side just because I presented things better than the next person, right? So origination through education. Number one, you have to, in my opinion, now remember, this is coming from a loan officer. I'm not sitting there across the table from your potential, seller trying to earn their business. This is the way my loan officer brain works. So tell me if you think this is not realistic, okay? Because if it's not, then this whole class was for nothing. I'm just kidding. You got to really tell them. You got to educate them about the balcony collapses in California. You got to tell them about the Surfside, Florida condo collapsing in 2021, killing 98 people. You have to make sure they understand why it's becoming so stringent and why it's becoming so difficult to get condos closed, condos transaction closed, right? So use those stories. You have to be able to explain to them why insurance is going up and how that's affecting lending and how that's affecting people's ability to buy and sell. I think it's huge that you're able to convey that message to potential sellers, okay? Now, stories sell, right?
Yes.
Stories sell. I'm a numbers nerd. I can just do numbers all day long. But there's certain people, engineer types, that react to numbers. Everybody else reacts to stories. So maybe you're new in the business and you don't have a ton of stories. Good news. I wrote out 5 of my own stories for you, okay? So all you have to do is say, hey, I have a colleague and this is what he experienced. I'm your colleague. We're all colleagues now, right? So if you need stories, use any one of those 5s on your listing presentation, because those are true, real deal stories, and those stories get the point across of having all this information up front so you can get ahead of the issues, right? Review real life stories. I think I had a note on that too.
Yeah, that story you want to talk about?
Well, the 2 stories I told you guys already was, number 1 was the, I've got an attorney client out in Escondido where they bought the house 3 years ago, and now because of insurance, he can't buy or sell. Exact same story as Daniel. And we have another client that I already told you guys a story where he bought in January, went to refinance, but they lost their rating from a B+ to a B. Can't refinance, can't sell, period. Just crazy, right? So use those stories.
What's needed for them to recover that?
B+ rating? That's a great question. Yeah, we got to talk to Alfred M. Best to figure that out. I really don't know. That's a great question. I'm going to get to the bottom of that. We wrote that question down, right? Okay, cool. I will let you know. Okay, not having this information, if you're a seller and you don't have this information, it's a straight crapshoot. You're rolling the dice. For real, it is. And I've always wondered for years why listing agents don't get this information up front. Well, it wasn't that big of a deal years ago, but now it's turning into a major, major issue, right? So don't roll the dice. Get the information, be the expert, be the professional, tell your clients exactly how you have to do it. And this is how it works. Again, loan officer brain. So if this is not the natural flow, let me know. Number 1, have PGS Home Loans. Check the FHA, VA, Fannie Mae, and all lender condo lists, right? It takes us a day, you guys, to get to all of the lenders. It takes us seconds to get the FHA and VA and Fannie Mae, Freddie Mac list, okay? Number 2, check the MLS, check all the sales, what's been going on. Now here's the crazy part. Just because there's a home that was sold 2 months ago, conventional Fannie Mae, Freddie Mac, doesn't mean that the insurance just didn't expire 2 weeks ago and now there's a new insurance policy, right? So you can't look at the MLS, see the sales, and just assume that you're okay. You'll get burned later down the road. Ask your PGS loan officer or your title rep, Corey, to confirm if it's a condo or a PUD. Big deal. If this thing's a PUD, Brad and I did one. I did all this research. Like, we really dug deep. It's like 24 hours of research, requesting stuff, just to find out it was a PUD. Like, all I had to do was email Corey, and Corey could told me in 30 minutes if it was a PUD or not. It's actually funny. I think we spent like $400 on the HOA cert, everything. What's that? Yeah, I would love that. Really? Huh? Did everybody hear that? The APN on a condo. So does everybody have ability to pull a property profile? Right? Pull the property profile. Angel, say it one more time.
If it ends in a 00, it's a PUD. If it's a condo, if it's an attached home and it ends in a 00, it's a PUD. So we were searching for a couple of properties in right. So she was selling her condo, a client of ours that we worked together, selling a condo, and she's like, Angel, it's being approved. I'm like, it's not on any VA anything. And so, and the houses next door were the traditional condos, but that section of the condos area was PUDs.
Yeah.
It's just, they look the same, they were just painted slightly different.
Yeah.
That's everything, but it's
Yeah.
00.
Yeah. You know, in that same vein, this is an interesting one. We've had condo communities. In fact, Angel, I feel like it's you and I were doing this, where the condos that were built on one side of the street were under a name and it was approved on the VA condo list. Was that the same one? And the next one wasn't. And we couldn't figure out why, but maybe that was exactly it. So really dig into that stuff, you guys. Taking the time to dig in up front will save you so much time and save you face and make you look at it like an expert later down the road. Okay, next one. After we've done the top 3, order the HOA certification. Okay? Whether you pay for it, which that's no fun, if you explain this properly to the seller and explain to them why they need to pay for it and get that thing going, if they have to pay $350 right now, which stinks, that's no fun, but it could save them tens of thousands of dollars later because you didn't wait till you're in escrow at week 4 to find out that you can't do an FHA loan on it, and now it's a stale listing and you have to go back on the market and reduce the price by $25,000, when if you had just gotten the information up front and you marketed to the right people from the get-go, priced it correctly, you literally would have saved that client tens of thousands of dollars, right? And I know, not every market, I get it. But right now, when things are a little slower, it could literally be tens of thousands of dollars, right? So if you, again, loan officer brain, maybe I'm not right, but I just feel like if you can convey that message to the person across the table when you're talking about listing their property, number one, no, I don't think any other listing agent is telling them to do that. So it positions you as the expert, and it positions you as the person trying to take care of them and work in their best interest, right? So order that HOA certification. My team and I will help you. All we have to know is the HOA management company. We'll reach out to them. We'll figure out how to order it. We'll figure out what the cost is. We'll get your credit card information from the client. Order that thing up. Send it over, right? And the good news is they're not trying to list for 3 weeks. You know, we want to sell in a month. Awesome. You don't have to pay for a rush, right? So now it's $200 instead of $450, right?
Does it expire?
Yes, it will expire. Absolutely. But if they know they're going to be selling, you're 90 days out. Now, and this is the next part right here. Watch this. Great question, though. So the other thing you have to order is the HOA master insurance policy, right? Order that thing. Because to Yolanda's point, let's say you go to list that property, and while you're listing that property, a week into being listed, the HOA master insurance policy changes companies, and the coverage changes. You're toast. If you have that HOA master insurance policy in your hand and you see the expiration date is June 2026, we're pretty good, right? But if it's January 1st, boy, you better get that thing sold, huh? Better get it sold by December 31st, because who knows what's going to happen on January 1st, okay? So order the HOA master insurance company. I'll tell you right now, sometimes they charge. There's a company called EOI Direct that we have to use quite often. It's $150, but hopefully, if it's a cool HOA management company, they'll give the information for free. Now, here's the next one. I called Cindy about this a couple nights ago. I said, hey, Cindy, part of the program is you just go get all the HOA documents. Again, loan officer brain. And she's like, Josh, don't you know that some of these HOA management companies are charging $800, $900 for all these CC&Rs and bylaws and reserves and all these things? I had no idea. I always thought they were just like, you just go pick it up, right? No. Like I said, I learned quite a bit putting this thing together. So here's my comment to that. You guys are all resourceful, right? You got to put your inspector hat on. Number one, get the HOA certification first. Let's see what that thing comes up with. What kind of problems are popping out because of the HOA certification. If that HOA certification is clear, you don't need to get the condo documents, right? You just need the HOA and the master insurance policy. But if there's problems on that HOA certification, then absolutely, it stinks. If they're charging $800, that's no fun. But absolutely, it's in the client's best interest to pay for those things up front to figure out what issues are on there so you can get ahead of the game and make sure you're marketing the property to the right people. Or, I mean, if it's going to be cash only or hard money, then you need to know that up front, not 4 weeks into the transaction, right? Because I know this just from talking to the sellers of the agents. Like, I've had sellers ask me, why didn't the agent know this up front? They might not tell you guys that, but that's what they're thinking. You're like, I don't know. But they're thinking that. They're blaming you as the agent, and now you've lost face. You know, you're not going to get a referral out of it. And then on the contrary, watch this. You find out all this information, right? You're a condo community. Oftentimes neighbors talk, right? So, hey, my agent found me this, this, and this. Now you go out and you can market that entire condo community if you have all this information, right? So use that to your advantage. Go drum up more business because you are the gatekeeper now. You're the holder of all the information. Does that make sense? Kind of, sort of. Is that realistic or am I way off base? Kind of, sort of? Okay, cool. Good. So that's your condo. And I think it's the second to last page, we made up a little condo pre-checklist for you guys to use just as a guide. Again, it's a lender putting a list together. If you guys want to create something else as a guideline to use, feel free to do so, or if we can update it for you. Miss Megan Moore is phenomenal at creating all kinds of things. Thank you so much. Now, pros and cons of obtaining this information up front. The pros, you get ahead of any issues. I always tell my clients, my job is to deliver good news and deliver bad news, right? If there's bad news, my philosophy is get it out right away. Get it out right away so you can start working around it, right? Same thing here. Get ahead of any issues. Understand how to market the property. Let's say during this investigation process, you realize that, hey, we can do an FHA spot approval. It's a slow market. How great would it be to open up the doors to FHA buyers because you know you can do an FHA spot approval, right? How many FHA buyers are out there? There's tons. We've got tons of FHA buyers that are fully pre-approved looking for a condo to buy, right? Save time by choosing the right buyer. Again, we talked about this one, beating it to death. So many times I've been called by realtors, probably many of you, saying, hey, Josh, just found out we're 2 days from closing and now we can't close. Or we're a week over closing. I think you called me a month ago telling me about this. We're a week past closing and they can't because of some HOA dues. Sure would have been nice to know that, in the very beginning, right? Save tens of thousands of dollars by not having a stale listing, less stress. Does everybody love freaking out at the very last second? Those are such great days when you're just like, ah! And enlarge the buyer pool. I already talked about this, especially with FHA, or if it's a PUD. I can't tell you how many agents I've had, they thought they had a condo. And they put right on there, not VA approved, not FHA approved. Right? They never checked. They didn't check if they didn't know it's 0-0. That's right. Here we go. Cons. Costs a little bit of money. Or a lot of money, just depending on what it is. Like if it costs $300, that stinks. If it costs you another $700 to buy all the condo documents, that stinks. But you're getting rid of all the surprises and all the mental anguish, right? And then it takes a couple weeks to get everything wrapped up, just depending on how long it takes for each HOA management company to actually gather information and send it over to you, right? And we all know that HOA management companies are a complete joy to work with, and they're super forthcoming with all the information, right? Process. Real simple, you guys. Gather the information. Send the documents over to me and my team or whatever loan officer you're working with as long as they offer this service. We're going to take all of the information. We've got 10 different lenders that already said, hey, send us all the condo documents. We'll review it and we'll come back to you and tell you exactly the lending options that are available. Okay? If it's non-QM, it's non-QM. FHA spot approval, VA, conventional, whatever. Send it over. Takes us 24 hours, 48 hours top. We'll get you a full and complete answer on that condo so that you can then report back to your seller, this is what our options are. Here's how we're going to market your property, right? It just seems so much more professional and so much more of a service, a value add as a listing agent versus not doing that, right? And I think the biggest takeaway is being proactive and addressing all the potential condo issues, getting ahead of the game. It makes you the expert. It makes you the professional. And I just think there's so much value in that. So, does that help?
Yeah.
Questions, comments, concerns?
So you said a second ago, PUD and 00, is that automatically VA, FHA approved?
Yeah.
Okay.
Yeah. FHA, VA approval with what? Yeah. FHA and VA, if it's a PUD, you can do it all day long. Again, with PUD, the big takeaway is that if the HOA master insurance has to cover the structure of the building, then you fall under the HOA master insurance rules. If the individual owner has to get their own insurance policy to cover the structure, then the HOA rules don't adhere, or it doesn't affect that unit. Does that make sense? Yeah. Okay. Before you go, number one, thank you so much, you guys. Hopefully that wasn't too painful. I was trying to keep it entertaining, or at least interesting. So hopefully you guys enjoyed it. Any questions, comments, any information I can provide?
Yeah.
Yep.
So earlier, I think Daniel's example of the condo.
Yeah.
How they couldn't sell it, had to produce it to a fire sale.
Yep.
And you said someone could buy it and then just wait for it to go through.
Mm-hmm.
Like, what did you mean by that? Are you thinking that like in a few years through the government, they're going to make things easier again?
Yep.
You think we're in a period right now where it's difficult and eventually we'll see a little bit of light at the end of the tunnel?
100%. I can already tell you, his name's Joe Fusco. He works for the San Diego District Attorney. He's an attorney at the office. One of his condos cannot be sold at all. He's furious, losing his mind. He checks with me probably once a month. It's actually one of Shoshana's clients, right? And he's on it. Like, he's running up the flagpole, doing everything he possibly can, pushing his attorney weight around, trying to make things happen. And it's only a matter of time until the wave of condo communities. I mean, do you guys remember, for anybody who's been in the business a long time, there was something called an implodometer in 2008, 2009, when all the banks were collapsing, right? It's going to get to the point with condos where there's going to be so many condos that just can't sell. Just can't sell. And there's only so many of that is going to happen until someone says, okay, we have to fix this. This is bad. This is really, really bad because it's putting so many people in horrific situations, right? So my point was, if you're an investor and eventually that pendulum's going to swing back and insurance will be available, they'll get all that stuff figured out. Fannie Mae might loosen up their guidelines, or maybe the repairs are done, blah, blah, blah. I'll go buy a thing for $100,000 under value and hold on to it for 3-4 years and make a couple $100,000 on it later on down the road. Absolutely. Plus, if you buy it $100,000 under value, you'd probably find a tenant that can pay the rent, right? So that was my point. Yeah. Did everybody hear Chase's comment? He said that once a year they're required to actually send out the HOA certification. My thought there is that it might be old data. So, but if it's one that's within recent, then that's fantastic. And the other thing I'd say too is that if you're the resident of that condo community, call first to the HOA management company so you can get a free copy, right? Because maybe they know somebody. Maybe your client is the president of the HOA board. It carries a little weight, right? And he can get one, or she can get one. So try all the avenues first before you just go start paying for things, right?
CC&Rs, if you need a copy of that right away, a lot of times if you're a listing agent, you order the title report in advance.
Yeah.
But before you even put it on the MLS, you
right.
have to open a prelim. If your title company hyperlinks documents, CC&Rs would be in the title.
Yeah, that's true. Corey, is that right? Like, you can get a lot of the title documents through your preliminary title reports?
Yeah.
Yeah. Everybody call Corey right away, too.
Yeah.
Absolutely. Corey, who are you with?
Fidelity.
Fidelity, you guys. If you need a title rep, Corey and his wife are phenomenal. Yes?
So if you're dealing with a PUD, does that mean you don't have to worry about SB 326, or do you still have to worry about that?
You do not.
Oh, wow.
Yeah, PUD's a big deal.
Okay.
So if you get the PUD designation, that's awesome.
Okay.
Yeah. And, yes, sir.
So there's not a lot of faith out there for these management companies. So
No.
certifying the certification.
So the certifications are just data. You're right. So that actually brings up a great point. So have you guys ever come across a situation where some other lender was able to do it, but nobody else was? Nobody else could, right? There's a couple situations. And I'm not saying that there's a lot of loan officers out there that'll go through and just change the information. But listen, if you don't have any loans going on and that's your commission for the month, and it just means that you check a box and your loan's approved, it happens. I know a guy who doesn't do it anymore. He's one of the biggest lenders in all of San Diego County, and he made his first 10 years in the business doing just that. He was the downtown San Diego lender, and it was just chip, 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 erase that, check this, blah, 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 done. So he doesn't do that anymore. I know him personally. I know he doesn't. But there's people that do. So if you see something where it happened and nobody else is able to get it done, and that guy won't pick up his phone to do the loan again, could be some shenanigans going on, right? So there's always that possibility as well. And you're right. As far as like who certifies the certifier, you just have to count on the HOA management companies and all of their pleasantries to get it right, right? Any other questions? Awesome. Thank you so much for coming, you guys. I appreciate it so much. Really, really appreciate it. And hopefully we'll see you guys next